All right. Welcome, everybody. Matt Bouts, certified financial planner, and Alan Nays, CPA. Welcome back to episode 2 of the podcast Yet to Be Named. We're working on that, guys. Um, uh, Guardian Business Advisors is the name of Alan's company. But again, just a reminder who we are. I'm a financial planning expert. Alan is a tax expert, and we're putting our heads together to be collaborative for tradesmen in all things financial and tax planning related. As we like to say it, we help business owners who hate paying taxes and hate traditional advisors or traditional tax pros. Um, we're excited to get started today. If you listen to the first episode, you know what this one should be about. This is about what is strategic tax planning. And that's what we're going to be jumping into today. But Alan, before we do that, did you enjoy your 4th of July?
Yeah, sure did. I kept all my fingers, so
That's
we're off to a
always a
good
good.
start.
It's always a good thing. It's always a good thing. I can report the same. No, we had a great time with the family, and it was time well spent. Time needed, right?
Absolutely, it's good to get away for a little bit and recharge the batteries.
Yeah, yeah. Hopefully, everybody listening was able to do the same. But I know not everybody was. People were working. You know, people need their lights and their toilets and everything else done up even over the 4th of July. Believe it or not, right? Um, all right. So, Alan, strategic tax planning is the topic for the day. As the resident tax pro on these calls, anyways. Um, what does that mean? What is strategic tax planning? How is it different than what most people are accustomed to and think about when it comes to getting their taxes done?
Yeah.
Um, Here, take the floor. And what does that mean?
Well, it's a great question. It's a little bit of a fancy term, but to put it in layman terms, it's not just simply planning out your estimated tax payments and who's going to file your tax return at the end of the year. More specifically, it's making the investment to form a plan to reduce your tax liability down to the lowest legal limit.
Right. And so and I can attest to this being a business owner myself and getting started with professionals and taking time to find someone who really is helping me do that, what you just described. I can attest that it's not the typical experience um, that most business owners have. And I'm sure there's lots of people listening here. Well, maybe there's not a lot of people listening yet, just because we don't have a lot of listeners yet. But people that are listening to this are nodding their heads, like, "Yeah, that makes sense."
Yeah,
Um,
yeah.
uh,
Kind of self-explanatory. Like, hey, you
right,
want to
it
pay as
is.
little taxes as possible.
Pay as
If I
little
had a
taxes as possible. What I'm talking to is, I just know that the process is for most tax pros or tax preparers out there, it's backwards looking, right? It's, hey, get all your documents to me and I'll get your taxes done, and you owe
yeah,
what you owe, right? Versus being proactive, which is really what you're talking about with a strategic plan.
right. It's more forward thinking. Like, hey, let's form a plan. How do we reduce these taxes? What opportunities can we jump on to
Right,
reduce our tax liability?
right. And I would argue that it's when you think forward looking, we're not even just looking forward the next year. It might be sitting down with someone and really understanding what they're trying to build, what their situation is, what they're trying to do with their family, with their business. It all ties together. And you might be making strategic decisions today to save on a potential tax impact that's happening 10 years from now, right?
Sure. Yeah, absolutely. An exit in your business, and maybe there might be a sale coming up. All sorts of life events can impact the plan.
The taxes. Okay, so tell us a little bit about, the difference between strategic tax planning versus just getting your taxes done. What are some signs for anybody that's listening where it's like, there might be some more meat to the bone that you're not getting? What are some signs if you're in a relationship with someone that might not be uncovering, let's say, every opportunity that's available for you?
Well, the truth is CPAs spend years in school and study for a very rigorous exam. They spend countless hours learning the tax code. But what really they're working toward is how to file the correct forms and when. Tax planning is a bit different. And to be clear too, so I don't sound like I'm bashing anyone. They typically do a very excellent job at just that. But um, their focus isn't on reducing your liability, and that's the focus of tax planning, is reducing the liability.
Right. They're focused on compliance. These are the rules. We are going to follow the rules, which, by the way, you got to do that piece of it, right? That's got to be part of it.
Sure. Yeah.
Right. But that's the forefront, right? It's, hey,
Sure.
let's look backwards and figure out what this is and comply with what your situation is, right?
Right, and that's why it's so critically important to work with a tax advisor that is forward and proactive thinking, so
Mm-hmm.
they can use their knowledge that they built up over the years of this tax code to structure your situation to best suit your needs to reduce your liability.
Right. Can you talk a little bit about some of the things that you traditionally see, maybe when you sit down with a business owner? I know you work with a lot of HVAC technicians that own their own firms,
Yeah.
or 1099 contracting or contractors. Um, can you talk about some of the things that you see on a regular basis where it's just where there's usually opportunity, or just things that, someone that's listening to this might be like, huh, that's something I should look at?
Well, the first thing I would say, with respect to your current tax preparer is, how often are you meeting with them?
Right.
Are you working with them collaboratively? Are you analyzing your financial results on the fly to evaluate things, to look for situations and opportunities that you could use to your benefit?
Right. And what does that look like? Because I think sometimes people think, well, I talk to my person more than once a year. When you say sitting down regularly, what does that mean? Like, what does that process mean? And what does that conversation sound like?
Well, first of all, there has to be an open door for communication, and a good process for that. If it's difficult to reach your CPA, or they don't return emails on a reasonable basis, that's sort of an issue. But at a minimum, I would say you need to be meeting quarterly, just to go over how the last quarter went, how's the year shaping up, and what's changed in your situation that you could potentially um, leverage.
Right. And yeah, and I can just speak again from my own personal experience. Again, owning a business, there's so much that can change. And sometimes when I check in with who I'm happy to report, the person that I work with is, it's important to work with somebody who's in a niche as well, right?
Yeah.
My tax pro is in the niche of financial advisory practices. Um, but sometimes those conversations are real quick. Hey, there's no updates. Okay, here's what's going on. There's no updates. But sometimes there are things where there's questions that are asked that are brought up. I don't even know. I don't even know that something that's changing in my business could potentially affect my taxes in a negative way, or it might be an opportunity to save even more tax. And so I would just say having those conversations and making sure that the pro you're working with really understands everything you've got going on, and then it has a process, and that's key. This is all about the process. There's
Correct.
no
Yeah.
one size solution, right, to fix everybody's tax issues, but it's about a process of identifying what those are.
Well, I've had numerous conversations where I'm just talking to clients, and it's not even specific about their tax situation, but they'll just bring up something that's going on in their life. And I'm like, well, hey, have you thought about this? And we could do this, structure it this way, do it in this way. And, it could benefit you on your taxes. So it's that open dialogue is so important.
Right. So, um, yeah, having those conversations and talking through that. So, is there anything else? Are there any specific, specific things when you think about, folks in the trades in particular, like you typically see when they sit down, like, hey, their business is rock and roll and they're running a profitable business. And it's like, okay, the tax bill's coming. I've already experienced that once. Every business owner goes through this where they have that one real painful, I'm making money. And it's like, oh, taxes suck. I knew they
Yep.
sucked, but I didn't realize how much they sucked. So somebody in that situation where they're they're running a profitable business. They know there's likely opportunities for them. What are some things that typically, are the first things that you're going to want to review or look at as it comes to strategic tax planning?
Well, the first one and probably the biggest one, the biggest opportunity to really make an impact is your entity structure. I mean, everyone's heard that, yeah, you need to have an LLC, of course, but should you have an S corp? Is it a partnership? Rare occasions, but hey, should we be a C corp, or is there a scenario where a combination of those entity structures should be in place? And that's pretty frequent, actually.
Yeah, I'm sure it's a conversation. Just from the little bit that I know of it, it's just uh, the amount of potential tax saving opportunity with the proper entity structure. And not only that, but like just protecting yourself from liability and everything else.
Right.
Those are important conversations to have. And what I'll just add to this is every single situation is different, right? You can Google, oh, how S corps save you money, or how C corp might save you money, or why you should have an LLC. And to your point, we've run into situations where some do-it-yourselfers will set up an S corp, but it's actually a partnership. And because they set it up the way that they did it, it's handcuffed them in certain ways.
Yeah.
And it would have been a very, very easy thing if they'd set it up properly from the beginning. Those handcuffs wouldn't be there, and now to unravel it, it's a challenge. It's a more challenging thing.
Very
And so I would just say that
context
every
sensitive.
situation is different.
Yeah, very context sensitive, and the general advice. Well, you should have an S corp. That's great, and that's probably a good step in the right direction for most people. But it's the implementation is where the things really matter. You got to take step 4, 5, and 6 after that to make sure you're maximizing your situation.
Yeah. Yep. So, what are some other signs? Some other signs that people see in their current, with whoever they're currently working with, where it's like, oh, I'm definitely working with call it a more transactional, just get my taxes done type tax preparer.
Well, if you bring them ideas and they shoot them down, is a huge red flag for me. And I,
Yeah.
understand it. There's they're trying to apply your situation to a narrow set of rules, a complex set of rules. But I think you got to think outside the box a little bit and say, well, yeah, you're right. You can't do it in this specific situation, but how can we structure it so you can do it that way?
Right. And I'll just say this too: is who else? Who else? I wish we had like more listeners. Which everybody, please share this video with friends if you think they'd find this information valuable, so we get real time feedback. I can just say, raising my own personal hand here. How many times in the past have you reached out to your tax pro with an idea, and it's a slow response? They don't get back to you, like you already mentioned, Alan. Or it's that's kind of, it's against the rules, which if it's against the rules, it's against the rules. But to your point, Alan, there's so many things, there's ways to structure it a lot of times where, you can take advantage of certain things. And I think a lot of times, because so many tax pros have not set their business up in a way, again, going back to that process, having a good process on how to go through this,
Right.
it's really hard to give holistic and valuable advice if you don't already know everything about a client's situation. And if you come to a tax pro that just does your tax returns and say, hey, I know one of the things you wanted to talk about, Alan, was paying your children, right? And the tax benefits potentially there for that to work for your business. Hey, can I do that? The answer might be, well, maybe, but here are the drawbacks. And, if your situation is this, then this. If your situation is this, then this. Really, your tax pro should say very specifically, based on everything I know about you, if you want to do that, you need to do X, Y, and Z. And that list of things might be different, Alan. Correct me if I'm wrong.
Oh,
If it's a different
exactly
business.
Right. Yeah. In different situations, that list of things you need to do is different in every situation too.
Yeah.
So,
So talk a little bit about that. I mean, if you can, is there, just kind of some of the nuance. I don't know if you can even provide an example just to give some people, because the thing about it is people I think sometimes think, oh, my CPA is trying to they're keeping all this. Like, I know that I could be saving more in tax. Why don't they just tell me, like, what are the things I can do to not pay so much in taxes? And it's a more complicated answer than that.
Yeah, it's always a more complicated answer, but that's why you make the time investment to develop a plan.
Yeah.
That's another big thing is there are lots of missed deductions that I see, perfectly legal deductions that just because it doesn't fit into the narrow box of here's what the rules are for that particular tax preparer, then they're missed, or they're just not brought up, or the time isn't invested to draw out those kinds of opportunities. I think a good example is your use of your home. How are automotive expenses handled, and you already talked about the income shifting you can do with paying your kids. Those are, in my mind, those are the three quick, easy, big misses by a lot of tax preparers.
Yeah. And so I think that the message here is, whether this is Alan and Guardian Business Advisors or someone else, the reality is as a business owner, it's not just about getting your taxes done.
Right.
It's about engaging with a professional in a way where you're, for lack of a better way of putting it, Alan, is looking under every rock for what opportunities there are.
Right.
And, there's things that, and frankly, I've been working with Alan long enough. There are ways to do this in a way that, I'll just say this: working with Alan, it's when you go through this level of detail and analyze a tax return, it's very rare, especially the more complex the business gets, the more rare it is that you're not going to find an opportunity, right? And a lot of times there's significant opportunities. So the point is whether or not it's Alan and his team or a different outfit, you really need to be working a proactive, strategic tax planning engagement with your tax professional, because there's going to be those kind of opportunities.
Yeah.
Mm-hmm.
I have a good example of, a recent example of a new client.
Alan is frozen up on my end of things here.
Preparer and said, "Hey, I bought an expensive boat. How can I deduct the boat from my business?" And predictably, the answer was you can't. But just talking with them, and we got to work on a plan. I'm like, well, here's how you can, and here's how to take this expensive boat you just bought and turn it into a business expense. And there is a way to do it legally. It's it might require some hoops to jump through and some extra steps, but if you want the deduction, it would be worth it to you.
Yeah. Alan, and maybe you tell me if this is inappropriate, or if you're sharing too much about a specific client situation. Can you walk through that example just to give everyone just kind of just a little snippet of that? And I want to just keep in mind, everybody, this example and these steps that Alan might go over here, if you're comfortable with it, Alan, may not apply to you if you're in a similar situation. But the point is just to give them kind of a snippet of how that works.
Yeah, we can do it sort of high level just so we don't disclose any confidential information.
Yeah.
He's on his boat is stored on a very busy lake near me. And it's like, well, why don't we form an LLC where we're renting that boat out when you're not using it? And there's some risks there. There's some extra steps, and that strategy might not be for everyone. But if you follow those steps, now you can take the depreciation on that boat. And it ends up being a pretty big write-off for him. So in his mind, he thought it was worth it.
Mm-hmm. As somebody who has a boat docked on a very busy lake here in Minnesota, myself, this is what's so great about this. I'm having this conversation. I get to talk to the CPA. You think about the access that I get.
Yeah,
I know
the bill's in the mail.
What's that?
Your bill's in the mail.
Right. But seriously, and I've actually looked into it a little bit myself. I haven't looked into the tax stuff.
Yeah.
But to your point, there's some extra steps. There's a company called Boat Setter, no
Yeah.
endorsement of them, but they'll just find people to rent your boat out, right?
Sort of like a Toro for boats.
Right. Exactly. Yeah.
If you're willing to do it, there's a way. There's almost always a way. You just have to.
And I was looking at it just from a cash flow. My boat is sitting there in the lake most of the time when my family's not using it.
Well, you might not even thought about using your boat as a write-off part of that.
No, this just makes the math even better. So see y'all. Right. Any of you folks in Missouri or Minnesota, there's lakes. You get some big ones I know down in Missouri. We just have lots of them here in Minnesota. Yeah. Anyway, this is a perfect example, y'all. This is a perfect example of getting to understand the entire situation. And, you might be like, well, I don't want to rent my boat out to somebody. There's no way I would let somebody in my boat. You might be somebody there. But the point is these opportunities will be presented to you. And it might not be something that suits your fancy, right? But this is an opportunity, clearly, if you take steps X, Y, and Z, right? And that's a great example, Alan. I mean, especially because I'm going to now dive into that more myself and look into it more.
You got some research to do, huh?
Right.
And if you want a bigger boat, this is how you justify it to the wife. So this is a tax write-off, people.
It's so funny is we're literally going to, as soon as we wrap up and done, we're doing that tonight. My son's got a baseball game that I'm coaching, and then the dock has slipped up next to the baseball fields. And I can see this conversation. Hey, honey, we're going to get a bigger boat. And the math means we don't have to spend any more than we already are. Fair enough. How do you say no to that? Right. No. No, this is good. This is great. Excellent. Anything else as far as signs? Traditional tax prep person is just kind of traditional, let's call it, to use a nice word.
One that just shoots me right through the heart is if your tax preparer tells you that you should be happy you're paying more taxes because that means you've made a lot of money. That just kills me every time. It's like, yeah, well, making the money, that's the good part. But, I think that's a resource best used in your company than the hands of the IRS, in my opinion.
Yeah, I would say that. I've had clients in the past that have said that to me. Well, taxes are necessary. It's like, yeah, well, they very well may be, but yeah,
If you're one of those patriotic types that love paying taxes and you want to pay extra, the IRS will let you do it.
Right.
I don't have a problem with that.
I'm yet to run into one of those. Yeah.
If you just want to pay what's legal, then I understand that too. And that's who I typically work with.
Right. But I have to ask you this fairly. Have you legitimately run into clients or prospects, let's call them, people you begin working with, that have had that said to them? You should feel good about paying this? Or
absolutely. Absolutely have.
Wow.
And we got to work on that one, and that was like a 6-figure savings we ended up realizing.
6-figure savings. Yeah. So $100,000 plus.
Yeah, it was north of 100,000.
Wow. Yeah. So that person's obviously making a lot of money. To their point, I mean, it's true. Like, oh yeah, you're making a lot of money. Well, you can make a lot of money and pay less in tax too, right?
Yeah.
And that's the biggest piece of this is, I would say, is the tax code is written in a way. The IRS, the federal government, is essentially telling you, if you take these steps, and granted, it's not this clear. That's why you need folks like Alan or a professional like that. If you take these steps, we're going to incentivize you to do that, right? And the more money that you make, the more those opportunities are open to you, right?
It's a percentage. It's always a percentage game.
Yeah, percentage game. What do you mean by that, Mark? Explain that in layman terms.
Your taxes, you got to call me. You just absolutely have to.
You absolutely have to, right? Yeah. But even if, I mean, that's the kind of stuff where I'll speak for myself. I get excited about it as well because so much of the stuff that we do on my end of things is tax related as well, and it's collaborative in nature with the tax pro. So. Yeah, but that's just you should be happy about your tax bill. It means you're making money. No. Yeah, we should be happy you're making more money, and let's figure out how to reduce the tax bill. And And the reality is depending on what is important to you and the direction you're trying to go, there's lots of different things available to you. If you're somebody that wants to save for retirement, there's ways to reduce your tax bill while saving for retirement as a business owner. If you're somebody that's not into that, but you're into investing in real estate, maybe you own an HVAC company and you want to own some rentals, right? Yeah. And you're making extra money and you're trying to figure out what to do with it. That there's potentials to reduce your tax bill that way. So there's lots of things, and this world can be opened up to you. And it's just important for you to get engaged with somebody who's taking a look holistically at the entire picture as it relates to what you're trying to do and trying to accomplish, and then applying the tax code. I think I mentioned this before, printing off the tax code to be a stack to the ceiling of paper, applying that to your individualized situation. Yeah. Alan, anything else on this strategic tax planning? What else should folks know?
Well, one other prong that I think we should focus on, and this will be the topic of our next one, is retirement savings. And this is really your area of expertise, Matt. So we'll let you talk about this more, but it's just something to keep top of mind. The different retirement plans, programs, however you want to call it, in your company have different benefits, and evaluating the right one to best suit your needs can have a pretty powerful impact as well.
Yeah, we'll do this just as a primer for the next one, but that's one little tiny aspect of what we would call financial planning, right? And the reality is you're exactly right. As a business owner, you have a ton of opportunity to save on tax and save for your retirement, right? And we can get into some of the nuance and details of that. But really, next time we're going to be talking about financial planning, holistic financial planning. Tax planning is part of that. And, that really is the tip of the spear. You have to make sure that you have your taxes and a strategic plan for your taxes, in place before you can really work on the other stuff, right? As a business owner, right?
Yeah.
And that's why we had that conversation first in this call, Alan. But what I'm looking forward to is the financial planning aspect of it is really about setting goals. And one of those goals might be retirement. Everybody's got to retire someday. I mean, I know there's some people, I'll work forever, right? Well, that's all fine and dandy, but you can work forever, but we need to make sure that you're at least set. If you wanted to retire, you could at some point, right? So you're choosing to work. But that's one goal. Other people are like, I want to invest in real estate. I want to send my kids to, whatever school. What are your goals? What are you trying to accomplish? I want to grow my business to X, and then I want to liquidate it. So I got a big pot of money so I can do X, Y, and Z. I want to give more money to my church. Whatever is most important to you, and coming up with goals and things. And so then we're going to talk about what that process is like, because at the end of the day, as business owners, we're building this for a reason, right? It's not just to have a big pot of money. We usually have other means in mind. Like, what's the purpose of it, right? It's about trying to accomplish those things. So yeah, I'm excited to talk more in detail on that and dive into that piece of it. And then after that, we'll be diving into estate planning, what that means and why that's actually important. Not particularly exciting, but it's very, very important, right? Yeah, I'm looking forward to talking to that holistic planning, financial planning next time. And until then, we'll just sign off here. Alan, anything else you want to add there regarding any of this stuff?
No, I think we covered all the bases, high level. The detail-oriented stuff comes from the tax planning meeting. But from a high level, I think we nailed it.
Yeah. Yeah, and you guys, we wanted to kind of we need to form a baseline level of understanding with what we're talking about with folks here. Eventually, we'll get into some more of these nuanced different things. But yeah, Alan, thanks for the time. Thanks for kind of going over that strategic tax planning. And as always, for anybody listening, please share this with anybody that's in the trades that would value this kind of information. Send this over to them so they can watch it or listen to it. We'd love to grow this and get in front of more people that would value this information. All right. With that, we're going to sign off and we'll see you next time. Thanks, everybody.
Thanks, everybody.